Broadly speaking, should you be thinking about de-risking your portfolio? Here to help us answer that is FBB Capital Partners Director of Research, Mike Bailey. All right, Mike, it's a question everyone's asking with the market run the way that it's been and signs of froth elsewhere. What do you do?
So I think the first step is know what you own. Certainly a lot of folks, if you've been long the market, the broader market, S&P 500, it's been a great run and things have changed. If you look back at sort of the top holdings now, what were those top holdings a few years ago? It's a little bit different. NVIDIA went from nothing to sort of the number one position. It's a relatively expensive stock compared to the broader market. That's pulled valuations up. So broader markets are getting a little more expensive, but it's just a reminder, just spend some time, go back and dig in there. Do you have some overweights? Are you overweight tech, or maybe you're overweight the AI theme? It could be a time to just rebalance a little bit and get back more towards a kind of a modest average. But I do think as valuations creep back up to sort of some potentially dangerous levels we saw in late 21, just a very good reminder. We're towards the end of the year. Take a little break, wipe the dust off the portfolio, take a look, just make sure you kind of really understand some of those bigger positions.
But you can't afford to be out of the market. And I think this is the conundrum a lot of people feel, where they can say, yeah, I can look at this and think, it's a little frothy, but I can't get out. I mean, you get out of some of the days, the way they end up compounding, even if the market corrects 20%, you still lose money in the long run.
Absolutely. So it's time in the market. You do want to be fully invested. That's what we're recommending to our clients. I think the question is, what are you fully invested in? Are you sort of involved in some speculative pieces? Bitcoin's out there, some things are really moving up, or are you still diversified? If you've got a balanced account and you've owned bonds and stocks are doing great, hey, maybe it's a time to rotate a little bit out of stocks and pour some money back into bonds and sort of be ready to live to fight another day. However, I think one of the things that's really important here as stocks are starting to get more expensive, dig through a little bit. If you own some individual stocks, take a hard look. Are those things looking expensive? And has there been any bumpiness in terms of quarterly earnings? That's something that could really sink a portfolio. A bunch of names getting expensive. Oh, by the way, missing and lowering. That's really painful. So as long as you've got a diversified portfolio, you've got names looking back the last couple of quarters, they're doing pretty well. Those are some names you want to make sure you've got plenty of exposure to.
I guess I could have done better with some individual names, but I could have done pretty doggone well with a Schwab 1000 fund or a total market index fund. Why wouldn't I just do that and sit and let it sit?
Sure, that's one approach. So a lot of folks just want to own the broader market. I think, frankly, it goes back to behavioral finance. It's some stuff we've focused on a lot. Some folks just really struggle with buying individual securities and getting in trouble, whether you're anchoring to the purchase price and really struggling. For those folks, you might say, you know what, I'm just going to go passive, own the broader market, and I'm not going to touch it. I'm just going to rebalance back into fixed income if I need to. That's a pretty good approach for a lot of folks. For some, if you work for an employer, let's say you've got a big chunk of employee stock or something like that, that does change the story a little bit. You do have to make sure you're not overweight one particular sector or stock. That might suggest you go back and start to buy some individual stocks to sort of counterbalance some of those big exposures.
I've always heard that one of the risks that's more common than people realize is that spouses work for the same company, and as a result, they're totally overexposed to that company's securities, that company's 401k, et cetera.
You have to say that on a day that Comcast is down 10%.
Yeah. Anyhow, Mike, thanks very much. Mike Bailey of FBB Capital Partners.